Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this final day of May, Tuesday, May 31st. Great to have you with us. I am your host, Jesse Allen. Today's show brought to you by our friends at Growmark FS. And thank you for joining us, making us part of your day today. We had a pretty rough day in the trade, a lot of red on the screen. Not going to waste any time. Let's talk about it. Let's bring in our good friend, Jim McCormick with agmarket.net joining us this afternoon. Jim, good afternoon to you, sir. And not a good way to come back from a holiday weekend for us folks watching the grain trade. It was a rough one today.
Good afternoon, Jesse. Thanks for having me on. Yes, it was definitely a rough trading session, and probably a trading session not a lot of people are expecting to see coming out of the three-day weekend. I think technically the market actually closed somewhat decent on some of those contracts going home for the weekend. But I think the big story of the trade really kind of got going was news out of the Ukraine. There's some conflicting news coming out, specifically what's going to happen, depending on which news agency you want to listen to, Jesse. Plain and simple, over the weekend, Putin came out and made it sound like he was willing to open up some grain corridors, which would allow some much needed exports out of the Ukraine. There's an estimated 25 million metric tons of grain that's stuck from last year's crop in those ports. And then on top of it, you're going to start the wheat harvest for the Ukraine here relatively soon. But that was just one headline. The other headline made it sound like potentially they're only going to get those exports if Putin if Putin gets his demand, which would be dropping the restrictions or some of the sanctions come out of the country. I'm in that camp that's not going to happen. I don't see the Ukrainians demining their ports. That is defending their ports from further escalation of the violence of the war in the Ukraine. So I don't see that happening. And even if it would pertain to happen, with the destruction they've seen, their ports, of the bridges, of the roads, the idea that they're going to get up and running and be able to export grains relatively quick, I think is just not feasible. But the market definitely traded it today, in my opinion, like this was a done deal. We'll see what happens, but my guess is it's not a done deal. The bean market, it really got clobbered today. It had a very good performance last night. It was trading higher. It was a new contract high on the new crop, and then it failed miserably. It had an outside day down, and that seemed to just kind of accelerate some technical selling. As you mentioned, it is the last trading day of the month. That probably exacerbated some of the selling as we saw some funds look like they may be booking some of their profits.
Yeah, and Jim, I just think overall, on this Russia-Ukraine thing, we saw this story come in like 2 weeks ago or so. We kind of were trading back and forth, and then it's probably not going to happen. And some of that skepticism really finally settled into the market, and then now it just shows all it takes is one headline. And I'm still in that camp as well, that I'm very skeptical of anything happening. But we see it with this computer trading nowadays. We get a hold of a story, amplify that move to the downside. We're looking at limit losses in the winter wheats here today, and spring wheat not far behind. And this all ahead of this afternoon's crop progress report, which I know the trade is going to be closely watching that, Jim.
No doubt about it. The crop progress report, we're now looking for this crop to be completely planted. I think average guesses for the corn's around 86% planted. Beans are at 69% planted. Wheat's at 67% planted. As for the corn, we're past that prevent plant date for a lot of the country right now. And the beans, it's coming up quick. So I think the trade will be trying to calculate and trying to guesstimate how many acres will not get planted this upcoming year, which is still going to have a huge impact on this markets besides what's going on today. The reality is you still need 89.5 million acres with a trend yield of 177 was the minimum we're going to need production-wise just to meet the anticipated demand. And there's still a question, is that demand's understated depending on how much grain can or cannot get removed out of the Ukrainian ports. So a lot to be determined with the volatility we're seeing. I would guess tells us we're just in the beginning of a volatile season. And as we go to the latter part of June and July, it could only heat up potentially if the summer would turn warm and dry.
Very, very true. Well, and I think about this as well. If we see a substantial amount of acres that are going to go to prevent plant or switch acres, which we very well could start seeing here in the next week or so, just with all the issues we've had, one has to wonder, a day like today, big move down, we're not going to have a big move back higher maybe tomorrow if we get a pretty unfavorable crop progress report. And, I think that just goes to show how much volatility remains in these markets and why farmers and ranchers really need to be vigilant about their marketing right now, Jim.
Oh, great way to, I couldn't have said it better, Jesse. You definitely need to come up with a marketing plan and lay off the risk. I mean, if you look at just the movement today, there's a lot of money that was given up across the board on all these commodities. And the reality is bean market had about a 60-cent reversal from high to low. That's only half the trading limit. So, I mean, we could see even bigger moves when it's all said and done, folks. So now's the time to lock in these profits. I mean, if the economy would slow down, you could see demand destruction. That's what we're probably seeing in the long run. And then the wild card still is, like I said, what's going to happen to Ukraine. You can see what the market did today, Jesse, just on the rumors that potentially you could see some deal getting done. What actually happens if we actually do have a change or a ceasefire? This thing could really come undone quite a bit, because in my opinion, we probably are overvalued if you could start getting all that grain and oil seeds out of the Ukraine. If you can't get the grain out of the Ukraine, there's a very good argument that says we're undervalued. So, how this Ukrainian deal goes is still going to have a huge impact on the market. And that, you want to make sure that you have locked in these profits, or at least have a floor underneath it in case the deal is done.
Well, I think another thing to think about here as well, Jim, even with the sharp down moves today in the futures trade, we're still seeing some pretty hefty cash bids across the countryside here in the U.S., whether we're talking corn or soybeans. I've been hearing a lot of talk, a lot of farmers chatting just about how aggressive some of those cash bids are right now.
They're very bit aggressive right now. It'll be interesting to see what happens on the cash bids the next 24, 48 hours. Now we had a hard break in the futures. If the basis is going to offset that, or this break kind of scared some grain out of the market. But I know I've talked to several producers today. The reality is, Jesse, they're down to what they call their gambling stocks. They're willing to wait and see what happens. They haven't got the bean crops all the way planted. So some of those producers are holding off corn. We'll see what it looks like. This corn crop across the Illinois, Indiana does overall look pretty good from what I've seen, but we're far, far done from having a complete crop. The longer range maps continue to argue as we get in the latter part of June, July, and August, we could see a trend change, which would go to more of a wet kind of cool spring we've seen to more of a hot, dry summer. We'll see if that pertains. But if that would happen and you start taking a couple bushels off a trend, the market may have to go into rationing mode at least one more time.
I've seen this question posed from a few folks on social media today. I'll ask you your thoughts. Do you think with the sharp move lower here and with the general thoughts this market is overbought, do you think the highs are in here on May 31st? Or do you think this could be a down move today, maybe in the next couple of days, and then run this thing back higher if we have the right setup? I just wonder your thoughts. Do you think the highs are in, Jim?
Well, the reality is they could be in. I mean, when you look at the key reversal in the new crop beans, it was definitely a nasty reversal. We start hearing more bean acres being planted. You could make an argument that high is in. The corn market, I think, is a little bit more tougher simply because we don't know how many acres we may or may not get planted. So I am a little bit more cautious on saying the corn top is in. I would, though, make a note, Jesse, you take out that $7 corn level, psychologically, that's going to be pretty negative. Producers might consider putting some orders, rest and sell stops in case the market takes it out, and then maybe use options as a way to protect the upside down the line. But, historically, you don't put tops in this time of year. We traditionally have at least one more push higher into into the June, July time period. But, when it comes down to it, the market usually tops when no one's expecting it, plain and simple. So, like I said, the odds tell me we're not there, but, as a producer, you've got to be cognizant this thing could change. The crude oil market was sharply higher today, but then late in the day, there's now talk OPEC might kind of, I don't know if you're going to say kick Russia out, but maybe sideline Russia as a part of their quotient of how much crude they're going to produce, which essentially would allow Saudi Arabia and maybe the UAE to increase their oil production. And, you start taking the oil market would start to calm down a little bit. You might lose some of that inflationary play that's kind of supporting the market as well. The stock market's had a nice little run here last week and kind of followed through today at this point. So you could also make a little bit of an argument. Maybe we're seeing a little bit of commodity money come back out of the commodities and make their way back into the stock market after the stock market had a pretty good, 6-7 week sell off.
You summed up my next question I was going to ask about stocks and energy. So let's move on, Jim. Let's talk livestock. Rough day there today, too. Cattle held up for much of the day before finally just kind of succumbing to the pressure, while the hog market was down sharply here throughout the entire day. Let's start, though, with the cattle market. Holiday weekend behind us. We're going to be watching both markets for demand from Memorial Day weekend. But as you look at cattle right now heading into the month of June, what's your thoughts after seeing today's action and today's reversal to the downside?
Well, I'm very disappointed in the livestock market. I think you've got to be. I mean, the bulls definitely put on their defensive right now. I tried to be a little bit optimistic on the demand side of the equation, but it looks like the market's definitely fearful of it. Gas prices continue to go higher, back to all-time high prices right now. OPEC, like I said, they're debating on increasing production. I think that would lessen the stress on the oil industry. But right now, what we're dealing with, folks, is Europe is pretty much trying to do everything they can to get off the Russian oil, which is essentially going to increase more demand for U.S. oil, which is then going to make more competitive for international versus domestic consumption, which is going to drive the price of energy higher, which will continue to take money out of the consumer's choice. Either he's got to buy beef, food, or he's got to buy energy, and he might kind of move away from the higher price cuts. So that is something we need to be a little bit cognizant of right now. Like I said, the chart actions definitely was negative. The hog gap lower coming out of the weekend, that's never a good sign.
No, never a good sign. And I think about this as well. And, we look at this hog market where it felt like we went down and found a bottom here a few weeks ago. Felt like cattle was maybe doing the same, but we just, to your point with energies potentially going higher yet, and just the inflation play and maybe consumers going to some of those cheaper cuts, one has to wonder if that's going to put a cap on both cattle and hog markets here through the summer months, Jim.
It looks like it's going to. I don't think it's going to fall out of bed completely, because the reality is, I mentioned it before, I believe we're in what's called a K type of recovery in our economy. If you're in that lower third, inflation has definitely become a problem. It's taken a bite out of your spending power. But the reality is, if you're in that upper third, your income is, even though you're seeing inflation, we're still not seeing them back off. We're essentially seeing what's changed. Instead of consuming goods, instead of buying stuff from your Walmarts, your Targets, your Amazons, people are now doing things. They're going on vacation. They're going out trying to experience life. Hopefully, as they're experiencing life, they will go out to eat, and you will see a little bit better demand for some of those products. So I think it's going to be a little bit of a tug of war. But right now, in general, when you see gas prices over $5, some people say it could get higher at $5.50 to $6 for the nation. That higher cost has got to come from somewhere, and it looks like it's going to come out of some of the higher cuts.
Very, very true. Jim, fantastic analysis as always. I'll leave the floor open to you here for the last couple of minutes. Any final thoughts you want to share with us? Anything else we haven't touched on today?
Right now, I think I'm just going to draw back to what we talked about, the risk off type of mentality. If you're a producer out there, I'm going to encourage you to really take a second look at your balance sheet right now, where you stand. A lot of guys' production, the crop is planted, it's out of the ground. Now you need to maybe reevaluate your profit margins, where you're at, where everything looks like. Because as we saw today, what does go up, it will come down. It usually comes down twice as fast as it goes up. There's still some phenomenal opportunities to lock in some profit margins. So don't be afraid to do it. And like I said, you can always use the options as a way to maybe some re-ownership in case the summer does end up turning hot and dry like some of the forecasters project. But risk, managing risk is the name of the game right now.
Well, Jim, if producers need help managing their risk, I know they can reach out to you and the team there at agmarket.net very easily. What's going to be the best way to do that?
I think the best way, honestly, is just go to agmarket.net, go to our webpage, sign up for our free research. And if you have any questions, email us there.
Well, Jim, always appreciate the time. Thanks for joining us here to wrap up a rough day in the trade today, and we'll talk to you again real soon. Thank you.
Thank you for having me on.
Jim McCormick with agmarket.net joining us today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.